Generally, how these are created is the price dives very, very hard, right? And it'll put a lot of puts in the money. So, like, right here is kind of where we saw it begin. Son of a... Through this period. And so you get a lot of short capitulation as these shorts go in the money. And they sell off. And that triggers a de-hedging from the market maker. Right? Which then, you know, can trigger FOMO. And this is across multiple assets, right? It's across not only the SPY, but like SPX, futures contracts. Because of, we're looking at like the whole index, right? And then the underlying stocks as well. So the force can be quite strong. And then, you know, eventually, the market maker hedge, much like on GameStop, will start to, you know, go limp. And then when that happens, puts will reposition at the top. And then drive the market down, like, on a new leg even further. This is where you get, like, a lot of big, like, mutual fund repositions and stuff like that on their, like, you know, like, collars, straddles, huge spreads. Those all reposition. And these are, like, billion-dollar positions. So they really move the market. One of the ways to tell is when you see the SPY drastically outperforming the securities contained within the SPY, right? Should we start to hide our moves, put out fake news out there to ensure that Kenny is thrown off? I mean, I don't care about your moves. Where do you get our from? Huh? Did the stock split make share creation harder for them? It could have. Potentially. It depends on how overlent the ETFs are and how many shares the ETFs need to return to their asset pool. I said this a bunch of times. I'll say it again. Based on ETFs charters and agreements with their shareholders, if an ETF has 1 million shares of an underlying stock, and that stock splits via dividend 4-to-1, that ETF then needs to have 4 million shares of the underlying stock, right? This is how their pro rata agreement works. Now, they can balance their NAV until they're rebalanced with other securities. They can balance their NAV with forward contracts for the missing security. But upon their next audit, to remain in sync with the underlying index that they track, they need to have 4 million shares, right? This is also true if they have 1 million shares and maybe they lent 10 million of those out. Now they need 40 million shares to reset their asset pool to the 4 million shares. XRT rebalancing is on September 16th. Or it begins on September 16th. This remains the only noticeable, like, market effect that I can find on a share dividend, specifically. Yep, quad witching, baby. Thoughts on that seemingly no rebalance that happened in June for GME? I think something there has to do with the fact that XRT was moved off and on Reg Show. I think they dodged their audit. So I think what they did was they pulled XRT off Reg Show on June 3rd. I think they submitted to their audit on the 17th. And then I think they immediately put it back on Reg Show. It's not T plus 60. It's roughly 54 trading days. But, you know, Tesla's split didn't happen at the same point in the previous quarter that GME's did, so it's kind of irrelevant. Crime? Yeah. One could argue that.